Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Coal India. Our analyst maintains buy rating on Coal India with a revised price target of Rs 440. The company's robust coal production guidance of 780 metric ton, 850 metric ton and 1000 metric ton implies a strong CAGR of 12% over FY23 to FY26. Coal India has achieved coal production and offtake growth of 11.5% and 9.1% respectively year on year to 460 metric ton and 485 metric ton during April to November 2023. Further, the e-auction premium has improved to 80 to 100% in the last 4 months, and the same bodes well for blended realization and margin of Coal India. The company targets to have 15% of e-auction volume share in second half of FY24 versus 9% in first half of FY24. Coal India's FY24 capex plan of Rs 16,500 crore is aimed to improve railway lines for coal evacuation, first mile connectivity projects, land acquisition and enhance infrastructure. This is crucial to achieve the volume target of 1 billion tons. Valuation of 7 times its FY26 estimated EPS is attractive and the stock offers a high dividend yield of 8 to 9%. A potential stake sale in Bharat Coking Coal Limited and subsequent listing would unlock value. Next we have an update on Lupin Limited. We upgrade Lupin to buy from earlier hold as Lupin is expected to report 21% EBITDA margin by FY26 led by strengthening respiratory portfolio, no major competitors in Spiriva until FY26, higher than IPM growth in the India business. The company intends to sustain this sales momentum driven by key product launches such as Spiriva, Diazepam gel and pickup in complex respiratory products. The company's Pithampur Unit 2 plant has been cleared by the US FDA. About 4 to 5 ophthalmic products are expected to be launched from here by FY26, where some would also enjoy FTF. In India, the company plans to grow its branded generics business by enhancing its sales force, opening of division and leveraging on growth traction in respiratory, cardiology and diabetes therapy areas. A healthy product mix and ongoing cost rationalization efforts are likely to increase gross margin and EBITDA margin to 65% and 21% respectively. We believe the stock to undergo re-rating post the clearance of Pithampur Unit 2, from where it will launch ophthalmic products. We increase our FY26 estimated EPS by 11% to Rs 60. At the current market price, the stock trades at 29 times FY25 and 22 times FY26 revised earnings. As the company margin profile is expected to increase in line with its peers, we upgrade to buy with a revised price target of Rs 1500. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.